Welcome to another episode. Today I'm joined by Simon, who's the co-founder of Chainflip. Welcome, Simon.
Thanks very much, Arjun. Nice to be here.
Awesome. So, as preparation for this episode, I've been going through like Chainflip docs, Chainflip's account, and of course, like your Twitter account as well. And just like going through your tweets, you come off as like someone who has strong crypto cypherpunk kind of ethos, right? That I saw a lot of stuff about like decentralization and then like how crypto is not moving in the right direction, maybe with like meme coins and everything. So, where does that come from? Like, why do you feel so deeply about some of these like crypto OG ethos?
Look, I wouldn't say that I am such like I'm definitely not a cypherpunk. I mean, I've been in this since 2014. I bought Bitcoin in high school back then. So, it's been a 10-year journey for me. And I'd say what initially got me excited and my views and things have definitely softened and evolved over time. But yeah, I think as someone who's been working on products that actually try and solve, problems people have, the persistent arrival of new trends and NFTs and meme coins and all this kind of stuff, the ICO craze. I mean, it's always something different, obviously, but it's really difficult to stay motivated sometimes when in the depths of despair. You're trying to build something useful here. It's got some traction. There's actual utility there, and there's all this other stuff going on. But at the same time, I've been doing this long enough now that I've learned to just kind of put that to one side, right? People are using it for what they're using it for. And, at this stage, I don't really care what people are trading. We deal in the major assets, and there's obviously still a huge market for that. And within that as well, there's still plenty of real world utility. I mean, stable coins, for example, have transformed the way that I personally and professionally handle money across the world. And there's a range of amazing yield opportunities and investment opportunities available through basically tokenizing denominations of real world assets, as well as, very capable networks, Solana, Ethereum, so forth. So, there's still a lot to keep me interested, but, I've had to learn over time to just sort of chill out a little bit and let people gamble if they want to, I suppose. But, that's not really, I've never really played those games. And sometimes it feels, especially when you sit on crypto Twitter too much, sometimes it feels like, people barking up the wrong tree. But it is what it is, so yeah. I don't know. I'm over it. It's fine.
I mean, you've been here almost like over a decade at this point. So, like, your exposure to crypto was Bitcoin. So that kind of explains a lot actually, because you're building a protocol that started off like focusing on native Bitcoin. So maybe we can just like get into that now. Like, what's the elevator pitch for Chainflip so that like anyone who does not know what you guys do can also come on the same page?
Sure. So in short, we're a cross-chain DEX. That means you can swap assets across chains. What we specialize in is in doing the big chains. So there's obviously a lot of EVM bridges out there already. There's a lot of DEXs out there already. There are not a lot of DEXs that actually cater to the largest assets in the space and the largest routes in the space. Primary example being Bitcoin ETH. There just are not many places you can do that, especially cheaply or efficiently or securely. There's been various solutions that have cropped up for many, many, many years now, but even way back when Ethereum started, it became pretty clear that we needed something that would allow us to transfer value between these ecosystems without having to involve centralized exchanges because of all of the composability problems that poses. But yeah, it's taken many, many years for such solutions to come up, and we offer one of the best. I mean, if you want to swap a Bitcoin to a bunch of ETH, you can do so using Chainflip for like 40 bips. And if you use Boost, you can do it in 10 minutes. So it's very quick and efficient. It's very convenient. That for most people is what we offer. How we do that, I think we'll probably cover that a bit more in the conversation. There's some pretty funky stuff going on in there. It's a lot more advanced than your average bridge, but I'm sure we'll get into that.
Yeah. So I think what I wanted to ask was like, there are so many bridges that focus on the EVM side, right? Like there are probably 50 bridges out there. But when you look at the Bitcoin market, there are probably only 2 or 3 bridges out there. So was it like a strategic decision for you guys to just focus on this market because it's a big market and there's like only a handful of players? Or was it more because of like your Bitcoin OG roots?
It's just market demand, really. It's the biggest one. It's hard to do, and yeah, so it's definitely responding to a need in the market. But do recall that we started designing it in 2020 before DeFi Summer even happened. So by this point, DEXs weren't really even a thing then. So the space has evolved a lot in the following years. It's now 2025, nearly 5 years later, and we've seen things evolve a lot. But I think back then it was still unclear where a lot of the DEX volume was going to be and what the shape of the ecosystem would look like and so forth. But yeah, I think it's still a major point of differentiation. That's why we never pivoted away from having that as a core feature that we wanted to have. But I suppose the purpose of Chainflip isn't just to support Bitcoin, right? It's generally agnostic cross-chain DEX. So if we can support it cryptographically, we can support it in the protocol. So in the same way that we've been able to do Bitcoin, we've also done EVM implementation, so Arbitrum and Ethereum, but also Solana as well. So these radically different blockchain networks that work in very, very different ways. Polkadot as well, we've even added. And they don't talk to each other. There's no commonality. So the purpose of what we're trying to do here is to have a network that is agnostic to all of that and essentially function as a sort of chain abstraction gateway DEX bridge thing. I mean, this is something I also wanted to bring up in this conversation. You guys cover interoperability a lot, right? And interoperability covers a range of things. People ask me, is Chainflip a bridge? Is it a DEX? Is it this? Is it that? It's like, well, it's kind of all of it, right? Depends what problem you're trying to solve, I suppose.
I mean, bridges by definition, I don't even know how to explain bridges anymore, to be honest. Like everything is an exchange from maybe one chain to another, and that's what we call a bridge today. But so you touched upon that you guys started in 2020. Right, and then at that point, I guess there wasn't much of a DeFi ecosystem anyway. So it makes sense that you did not focus on the EVM side of things. But what's the story there? Because from 2020 to launching in 2024, there's a 4-year period, right? So you kind of figured out the interop problem. You figured out Bitcoin needs to be movable from one chain to another. But how did you guys build for 4 years, and then did anything change in that 4-year period? Because a lot changed in the ecosystem.
Yeah, that's right. I mean, it's a good question. The original design we had for Chainflip is still very relevant to what it is today, but we had to add layers inside it to make it more functional as we were able to learn from the market and so forth. So one of the key examples is the market structure. Mm-hmm. So before intents were cool, we came up with something called the JIT AMM, which is essentially, it basically is exactly what you would see out of the intent market. It's an order flow marketplace. I think I've seen you guys call it on Twitter at some point, which is exactly what it is. But we came up with that a year before any intent protocols existed. So, we've kind of been adapting and evolving the system to be able to cater more towards users' needs. But our fundamental assumption is we don't actually need to move Bitcoin onto another chain. We don't need to make it movable. We need to make users order flow movable across chains, right? I want to get the value I have stored in Bitcoin onto some other chain in some other form. And so, that we've essentially created an abstraction layer, like I said before, with a marketplace inside it, so that, liquidity providers or solvers, if you want to call them that, same thing, and swappers who are actually doing providing the order flow in the first place and trying to get from one place to the other, and the network itself who sort of reconciles all of this transaction information that's happening in all of these different places, can all benefit from it and make the incentives work and ultimately deliver a product which actually solves the problem. And the problem is really simple. I have Bitcoin, I want ETH.
Mm-hmm. I mean, over the 4 years, were you guys perfecting the product, solving the chain design, or were you guys kind of trying to understand what does the market demand at this particular point? I'm trying to understand how you spent your time.
Yeah. So the first few months were spent in that design phase, trying to figure out how we would actually do this. And I think maybe to help understand what we did throughout all those years, it's probably helpful to maybe understand how it actually works under the hood. Mm-hmm. So Chainflip itself has its own blockchain and its own validator network. There's 150 active validators at any one time, plus some backups. Those 150 validators have a blockchain we call the state chain that sort of captures the universal state of the protocol. It tracks all the balances in various places. It has the order books and the pools where the swaps are made. It tracks the validator auctions and penalties and all of that kind of stuff. It is the global information hub for the system. But all of the validators also partake in a threshold signature scheme. We use a particular one called Frost, which works through Schnorr signatures, meaning to move any money on any chain, we need consensus between 100 of the 150 validators, so 2/3 supermajority, who can then sign over stuff and move money on those chains as a whole network. So at no point there is any individual actor who has custody of user funds or anything like that. It's essentially, if you think about the way a centralized exchange works, so you have Binance or whatever, you send Binance money, they allow it to trade it in your system, and then you can withdraw it to your other wallet. We sort of act as the Binance. The network itself acts as the Binance. So it's probably the largest decentralized custody network in deployment, and has been for some time, as well as being a bridge and a DEX and all these other things. So obviously that's quite complicated, because now you need to have a system where you have a bunch of validators that all need to work together at the same time, do these key generation ceremonies, witness all of these events happening on other blockchains. So, for example, the Solana deposit over here, signing and broadcasting a transaction to Ethereum to send a user their funds. And all of this needs to happen synchronously and efficiently. That's really hard. Like it is a much more difficult thing to build than your typical bridge. We don't rely on like some smart contract over here, and then you send a proof over some centralized service, and then it appears on some other place, and whoop-de-doo, everything's magic. That's so damn easy compared to this. This is like ultra hard mode. So what we did, so following a fundraising period, obviously, if you're going to build something like this, you can't just do it with a couple of really smart devs. It's a major operation. We're now up to 40 people. Most of the time that we've been in operation, we've been sitting around 30, and about 2/3 of that would be engineers at any given time. So pretty major operation. So through 2020, we raised privately. 2021, we spent a lot of time in what I would call development hell. Like getting all of these systems to work was really challenging. Particularly, we had a period of time where getting the threshold signature scheme system working well was proving to be really challenging. Like getting into extremely low level code, figuring out why individual sessions between all these different nodes were dropping, because in order to sign something, you have to get 100 validators talking to each other all at the same time. It's crazy. Like, I mean, that alone is like a very difficult software engineering problem to solve. But to be able to do that reliably over and over and over again.
You guys probably took up the biggest engineering challenge in crypto, right? Like one, building a chain, then like bootstrapping a validator set, and then also like making them talk to each other in such a way that they can actually read the state across like different chains. So like also interop added to it. But like what I have to applaud is the fact that you guys stuck to it for 4 years, and then you finally launched like later. So there has to be some inherent reason why you guys like stuck to this core problem. So that's like very motivating in a way to see people stuck to this like one vision that, okay, we have to achieve this. This is a big enough problem. Even if it's hard, it just makes it worth it.
Well, exactly. I mean, thanks for that, first of all. But yeah, I mean, the Bitcoin USD market alone is worth, I don't know how many billions or trillions a day, but it's crazy. It just like vastly outstrips any bridge or DEX you can think of, right? Yeah. So, through this whole time, we knew that this is kind of really the only way you can do Bitcoin on-chain trading natively, securely, and effectively. So even though it's taking a long time and it's difficult and all of that kind of thing, if we get it right, we've got the foundations for something which can, truly start to challenge even the centralized exchanges in their foothold in the industry. So it wasn't that hard to stay motivated, really, but it was quite difficult when, you don't have a product out, your token's not live, everything's going very up. Yeah. And then, of course, things start going very down. And almost honestly, during those periods over the last 4 years where things have gone down, I mean, obviously it becomes more difficult to raise funds if you need to and all that, but I was just like, thank God, like we've got some breathing room now. We're not feeling like we're missing out on too much.
There's lesser pressure in a way. Like, that's a bear market silence, right? Like nobody is asking you about anything. Everyone is kind of either on vacation or actually building something. So it's kind of a nice vibe. In fact, like I feel the interop space was actually built in the bear market. Like it started out in the last bull market, 2021, but then the teams actually built over the last 3 years, and now they're seeing the volumes finally.
Exactly. Yeah. So we finished building in 2023. We went live. The network went live, and the token went live in November of 2023, and we launched swapping a couple months after that. I think it was January 24. So we've been live now for just over a year, and we've learned so much in that time. We're now in a completely different sort of mode of operation. Obviously, with a live product, that changes a lot of things. But also, it's really encouraging because you can see what effect the changes you're putting in place have in a relatively short space of time, rather than just kind of guessing and hoping that in a year when you finish this, it'll still be relevant, right? But thankfully, a lot of the core assumptions have held up really, really well, and a lot of the improvements that we've been making over the last year. A lot of the stuff we have in now was stuff we were always going to do anyway, but we wanted to have more time in the market to really be able to test that thesis. And if you look at the average volumes over the last 3 months and you compare that to the first 3 months, there's no comparison. Yeah, so we're getting some pretty nice. It's not exactly hockey sticking yet, but it's definitely coming up in a major way. And we're at a point now where, as a company, between the liquidity operations and some other things as well, we're actually break even as a developer company, which is a really nice place to be. It takes a lot of pressure off and allows us to experiment and make better long-term decisions without having to rely on the token market necessarily, which is nice because it actually gives us space to make good product decisions, and making good product decisions ultimately is what everything in our ecosystem hinges around, including the token itself. So yeah. I mean, it's been a long time coming.
So there's only like one other bridge, or like I don't even know if you should call it a bridge. It's like there's only one other protocol that's similar in design and also like target market, right? Like it's Thorchain. So did you guys look at Thorchain as like for design inspiration and for the addressable market, or how do you guys view Thorchain in comparison to like Chainflip?
So I don't think I've really said this publicly before, but Chainflip started because we were exposed to Thorchain very early on. The founder of it actually created the idea in a Binance hackathon in 2018, about a mile down the road from my house. I actually see the building every day when I work out where he came up with the idea. So I was aware of it for a while. Didn't think it was possible because it wasn't. The cryptography didn't exist at that moment in time. But then it became possible, and Thorchain definitely started making directions towards making it happen. And we ended up in a position where we were doing a research project on it in my old company, and we didn't really look at Thorchain at any of the documentation or the white paper or anything. We had it explained to us on a whiteboard and kind of just thought, all right, let's research this idea. And we ended up writing a research paper that, without looking at the Thorchain stuff, we wrote a research paper how we would go about in more detail how it would work on a technical level and the incentive design and things like that. And when we turned around and looked back at how Thorchain was set up, we were pretty surprised to see how many differences there were. And this was in very early 2020, by the way. So nothing was live, nothing existed. This was all very theoretical at that time. But because there were so many differences up and down the entire stack, we thought, you know what, maybe this is worth pursuing as well, because there's probably some benefit in having two of these kinds of systems out there, and figuring out what approaches might be better. So Thorchain definitely had a head start. They've definitely given us a lot of information, especially since they went live, about how to structure things and what not to do in some cases as well. So we avoided some potential pitfalls that may have come our way had we not had the benefit of coming after. But yeah, I mean, definitely Thorchain is not linked to Chainflip in any practical way. We don't share any code, we don't share any design. But in terms of like the product vision, there's definitely synergies as well. We're much more laser focused on the core problem of I have Bitcoin, give me ETH, than Thorchain has been in the past. There's been lots of other directions that things have gone. But yeah, definitely a spiritual cousin of Thorchain, without a doubt.
I mean, it makes sense, right? Like, I feel people look at competition a bit differently. Like, I almost feel like in early markets, it's a good sign that there's competition or there's like another player, because then you can actually establish that market and then you grow together. Because, like, let's say if there was not, like Thorchain did not exist, you would not know the size of this potential market. So you actually know that, okay, 100 million a day in volume is actually very possible, even if you just stick to like this core problem of solving Bitcoin to ETH, right? So it's a very good thing that there's competition. But like you said, they took multiple different directions in terms of products. Like they have lending products, they have multiple different products, right? And in a way, like today's problem that the community is facing is also related to those products. So do you see that as a, I don't know, as a collateral damage problem potentially for Chainflip, because people won't do the research of like understanding what's the problem? Or do you see it as an opportunity of like taking over some of that market share?
Well, it's interesting. I mean, yeah, as you mentioned, there's been a debt crisis on Thorchain for a few weeks now. It's been brewing and evolving, and obviously it's hard not to get involved in that to some degree, as a project that is generally associated with Thorchain by a lot of people. I think it was interesting though, when the crisis first started happening, we got lots of people on Twitter and various other places saying, oh, does this impact Chainflip? And it's like, no, we've got nothing to do with this and never have. But, interestingly, we did also see the token price start to go down as a result of it. But then I think over time, as the crisis has unfolded, I think people are starting to realize that they're not really linked in any way. And I'd be lying if I didn't say that, we've had some people approach us looking for an alternative provider in cases where, they haven't really been able to provide swaps lately just due to volatility in the network and a reliance on arbitrageurs who seem to not be there, at least now at the time of recording. So it's been a real interesting time. I don't really want to get too much into it. It's not our project. We're not really involved, but there are obviously a lot of people who are involved in both projects. So we have had quite a lot of exposure to it over the last few days. But, it definitely brings, there is the risk, of course, as you said, that, this event might trigger some collateral reputational damage just because it's a similar concept. But I think the market's slowly realizing that that's actually not the case. And I think there may be some opportunities out there for Chainflip that, may come our way. But, in terms of like what we're doing about it, all of the things that we were already doing are not changing, right? We're still focused on integrations. We're still focused on improving pricing, speed, liquidity. The roadmap hasn't changed at all. We're just doing our thing. And, we'll see what comes of it, I suppose. But if anyone's out there who's been affected by it, sorry, it sucks.
I mean, I also just want to touch on like the token aspect of it, right? Like you guys launched the token before you launched the product in a way, I think like in 2023. So having this token linked to the product is also a weird dynamic to handle, right? Like technically you cannot do anything in your power other than shipping new updates, new features, getting more partnerships. But then things like market can change tomorrow, and then the token price would go down, and suddenly the vibes of the community would change, right? So how do you kind of see that as a thing, like having a token attached to a product, and then how you as a founder deal with that?
Great question. I mean, there are quite a lot of projects out there that, the token itself is very heavily linked to the core of the product. I think you could say that about Thorchain to a large degree. I mean, all the LP positions, all of the pools, everything. The core product itself is very tied up in the token.
It's a good thing and a bad thing.
It is a good thing and it is a bad thing. When it's really good, it's really good. When it's really bad, it's pretty catastrophic. So, we made a very conscious decision in our design from the very beginning that, our token is a network security token. It's not directly linked to any of the functions of the protocol itself. So our liquidity providers / solvers, they don't really care what happens to the token at all because they're trading in USD or BTC or ETH in these markets. And what they care about is trade flow. That's how they make their money. So flip up, flip down, they don't care. They continue regardless. Validators, obviously a different story, but they're token holders inherently anyway. So, that's one thing. And then key of all, swappers, the people who are actually generating the fees and the revenue that makes all of this work. They shouldn't have to give a shit what's happening to the flip price at all. I mean, it shouldn't have anything to do with it. So I think it's difficult for us because, we've been in a position for a year now where we know we're making good calls on resource allocation as a team, like, doing Solana, improving the swap structure, improving like LP API endpoints and like all this stuff, right? That doesn't really sound very hypey on the surface. And I think it can, especially when the token price just moves, right? Someone buys, someone sells. It's not really necessarily related to what's happening in the protocol. And it can be really difficult as a founder sometime to, emotionally segregate, like, this is the direction we need to head as a product and a protocol to generate, there's obviously a lot of emotions involved when there's a token out there live. So trying to segregate those two things and be honestly kind of brutal over the last year or so, especially just saying like, nah, we're not sacrificing resources or spending money trying to uphold a token price because that doesn't translate into fundamental return or revenue, right? The whole concept of the flip token is that the network gathers fees in USDC. So whenever swaps go through, it's about 10 bips. And the protocol itself collects that USD and buys and burns the flip token. So, the revenue of the protocol is directly proportional to the supply, the value of the token, and all of that kind of stuff averaged out over a fairly long period of time. So I think for me, it's just a case of like, sort of weathering the storm, if there is any, and also not getting distracted if the token like goes up a lot, like it did when it launched. It went up like a lot for a while, and now it came right back down, slid down over many months. But it's just like, my view on it is, our first year as a product was reasonably successful in establishing product market fit and sort of a base layer of volume and functionality and profitable LPs who are now, fully involved themselves. There's like about 15, 20 people working full time on just providing liquidity to Chainflip at this point, which is a cool thing to think about. But that took a year to establish, right? So just trying to separate the two. The product, the future looks great. The token just was never going to catch up to such an early stage product. Like, I'm sorry, but yeah.
I feel like you guys have had honestly a very good first year if you think about it, because I think you are doing 10-15 million on average at this point, which is a very good number for like a bridge that's been out for a year. The bull market definitely helps, but I feel like you've made certain right calls in the past 12 months. And then that's my next question, right? Like, how do you as a founder kind of balance this need for like short-term product improvements and then also like keeping tabs of how the ecosystem is changing? So in my mind, you guys have the boost feature, which is in line with like the intense model. Like, you recognize that the users want something faster, so you launched boost. And then the other thing is the Solana chain edition, right? That's something that almost every bridge has on their roadmap, and ideally they would want to be live, but then only there are like 6 bridges that are live today, and you guys are one of them. So you made certain right tactical decisions, and also you've been able to actually implement them, right? So how do you balance this out? And then what's the communication with the team like? Because it's very hard to align the team on some of these moves, because like you can tell them that, okay, we're going to build the best Bitcoin bridge, but then suddenly the market demands Intense and Solana. So it's very hard to align those incentives.
I don't think it is that hard to align for us. I mean, we work very, very closely together as a team. We have a lot of us. But because what we're building is quote unquote hard mode, we've become really, really good at managing feature development. Things take a while, they just do. So, working on anything and committing to it is like a 3 to 4 month commitment for like a good chunk of the team, right? Solana took about a year from start to finish. So, there's a lot more to be said than like what we definitely don't do is sit there on crypto Twitter month to month going, fuck, like this is the new trend. We need to respond to it. Like, that doesn't work. What we look at instead is like, okay, we've seen a couple of bridges try this thing, or we've seen this feature and like, yeah, we could do that. Think about it in the context of our protocol, knowing all of the ins and outs of how it works, and going, is this something which can fit into our paradigm without us having to spend, a year refactoring a million things? Is this something that we can make extensible in the future? And because the system's very modular and we have our own app chain where we control execution rules for everything, we can do a lot more than most other protocols can. I think what's been encouraging for me to see is like, although it took a long time to get going, we're starting to see the compounding effects of all of the features that we're putting in place grow over time. So Solana, as an example, only had like a couple 100,000 in volume a day for like the first month. And now it's like a third of all of our traffic, and by far the most number of swaps. We're seeing lots and lots and lots of little swaps now, which is something we never used to see. So I think it's a case of just straight up ignoring anything that's happening in the short term and looking exclusively at the swapping market. So I have this, I want that. Looking at the various solutions out there, look at what people are trying. I mean, we've come up with a bunch of original ideas as well, which have worked out quite well. But at the end of the day, I know this is sort of a cliche at this point, but people just want like a cheap, fast, and secure way to move value from one place to the other. So if your feature doesn't sort of address that problem in some fashion, it's a waste of time. So I don't know. I feel like because we've been around for quite a while now, it's easier to drown out, a lot of noise and spread ourselves too thin.
Yeah, I mean, so if you're on Twitter, like, I don't know, 3 or 4 hours every day, there's going to be like a new feature request or like a new marketing term that's thrown at you, and then you have to kind of figure out, okay, is this actually anything new, or is this just like a different version of what you guys have already been doing, right? So
Exactly.
it's very hard to balance that out. Like when I was reading your documentation and looking at some of your tweets, I almost did this like exercise of if Chainflip were to launch today, how would you guys actually position it, right? So
Right.
I ended up coming up with something like I don't know, an app chain that's like specialized for interop, and you guys can do intent-based bridging for something or the other. Like you have a network of solvers that you can rebrand from like validators, because that's what the market wants to hear, right? So it's almost like the terminology keeps changing, and then in a way, it's also our job to explain our protocol in those terms that the market understands, right? So how do
Yeah.
you balance that out? Because I see you writing a lot of stuff for Chainflip. So do you see yourself as like the guy to follow like Chainflip's journey and like what you guys are building?
I do like a big update post every 3 or 4 months, and I think I lay out pretty clearly, what the thesis for the next step ahead is. And I would definitely say, following my blog post is probably an easier way to do it. But yeah, absolutely right. Like I read our docs now, and I'm like, yeah, that's not really a good way to explain it right now. But a lot of that stuff was written 2.5 years ago. So it's like what to call things, how to frame things. I don't know. At some point, I've just honestly, I've kind of given up. I just don't really care anymore. Call it whatever you want. Like, it is difficult, but yeah, I mean, I think we do need to do a bit more work on that though, and we have been actually. Like, we're now, our website was made before even the token was live,
Mhm.
so we were in that phase where we're like trying to sell ourselves as like, a future protocol, like it's going to be great, like sort of a bit vague. But now it's like we have some very concrete value propositions. So we're deleting the entire website currently and like just focusing in on like what problems does this thing actually solve for you. And if you want to figure out how it works, there's a white paper there. You can sort of conceptualize it. But now it's like, cheap fast swaps, Bitcoin, Solana, like thumbs up. If you're a liquidity provider, like amazing yield opportunities on like major asset pairs, so you're not exposed to like this shitty tail risk and blah blah blah. And then for integrators, it's like, if you want to do Bitcoin, Solana, and Ethereum in your aggregator or your wallet or anything like that, I mean, you don't really have much other choice, brother. Like,
Yeah.
come on over. So,
Trust me, I know.
so we're like now starting to frame things in that way, right? It's like, what problems are we actually solving for people now? And I think it's much easier to do that when you have a live product. So, yeah.
Makes sense. And like just on writing in general, do you write a lot? Because like I think you think very clearly, and like anything that I've read from like your community updates to your tweets, there's a very clear thought process, and like you're actually talking or like you're actually writing like you would talk, right? So do you
Yeah.
like writing, and like is this something that you would do more often going forward?
I used to do it a lot more. These days, there's a lot of management going on in the background. I don't write the tweets, for example. That's
Yeah.
Sean mostly. But yeah, I associate writing with thinking. It's the same thing. If you really want to like understand a problem, sitting down and writing about it is often a great way to sort of formulate, what your actual assumptions are. Like a lot of us just sort of, most of the time I do this as well, just sort of bumble through life, just sort of allowing thoughts to come in without like taking a moment to actually think critically about them. And I think writing really gives one the opportunity to, actually, because unless you can't hear yourself speak really. By the time it's out, it's too late. But you can read what you've just written, and if it looks weird, it's like, well, why did I write that? So that whole process for me, I think, has been really, really important for me in my decision making process and a lot of that kind of stuff. I've got like probably 100 email drafts. It's like sitting in my drafts in my Gmail that were never sent or done anything with. They were literally just like me thinking about how I would approach a conversation, or how I would position a certain feature, or the rationale behind choosing to do one thing and not the other. A lot of the time I'll just sit there, write it out, and then I'll just sit in my drafts and never see the light of day. But now I'm now actually in a position to talk about it from a fairly well-reasoned point of view. So should I be doing more public writing? Should I spend more time updating the docs and positioning things more clearly and like going through the reasoning of things? Maybe,
I
but
mean,
I'm kind of busy right
like
now.
Of course, like everyone has so much going on that probably, and writing is a very tedious task, right? Like nobody
Mm.
wants to actually. Okay, fine. It's one thing actually writing the first draft, and then it's actually another thing to clean it up, edit it, and make it publishable, right? So it
Yeah,
takes
turning it
a
into
lot
a
of time.
digestible, interesting thing is yeah,
It takes a
is a
lot of
process.
time, but then like I feel like you think about the space well, and whatever I've read from you, I've really liked. So I would definitely read something that you would write. So you should definitely write more.
Yes, boss. I'll make it happen.
No, like I probably say that to everyone that I like reading from, so because so that I
Right.
can read like more good stuff.
Okay, I'll do my best.
Okay, so like last question. I think you guys hit 18 million as the all-time high volume, and you had a goal last year of having like 100 million a day as a North Star metric, right? So do you
Mm.
think you're gonna achieve that this year, or because that's a big number, right? Like not a lot of teams actually hit that number every day on a consistent basis.
It is a big number, and like a lot of the bridges and stuff out there, like I'm gonna call out Thorchain and Maya here, like that big number you see of like 200 million. Most of that's just internal arbitrage. It's not actual user flow. So it's like actually getting 100 million in orders is a pretty big number. You're absolutely right. That was definitely the goal that I set, and I wanted to achieve by the end of the year. Certain things didn't happen. Certain things got in the way, but it now seems increasingly likely that 100 million this year is well within reach. I mean, we're already at 20, right?
Mhm.
It's only 5x from here, and considering we've already like 30x the volume since we started, it's not that much of a stretch. Of course, there's liquidity constraints. There's some integrators that we're waiting on. There's some features that we need to put out to make it work for them. That's been a lot of what we've been doing in the last 6 months, is like upgrading the system so that Chainflip can be inserted into a bunch of different contexts and be like nice and compatible with existing systems. So like, for example, if you're someone that is dealing with EVM bridging a lot and cross-chain messaging a lot, we have that, but it's a bit wonky and a bit weird. And like, obviously when you go to Bitcoin, it makes no sense at all. So, we're really having to like rethink some of those features to make them usable. They've been there the whole time, and people have the difficulty with them. So that's one thing. Also, our deposit channel system is a cool feature about Chainflip. You don't need to connect a wallet to use it. You get a unique deposit channel associated with your swap intent. That's actually what we called them initially. They were called swap intents, and then we changed the name, and then intents became cool. Big regrets. Anyway, so yeah, you can just send assets to that address for a certain amount of time, and it'll automatically be swapped to the destination address you sent. That's really cool. Also, really incompatible with a lot of the way current bridges and aggregators and wallets work. They have to build logic around that assumption. So allowing one to just send call data with a vault message, and that will trigger the swap and so forth, which is coming out in a few days. But things like that. They don't sound very sexy, but when you want $100 million in flow, like this is the stuff you got to do.
A lot of things have to work to get there.
Yeah, and it relies a lot on external partners a lot of the time as well. So working closely with other teams and ensuring like good service delivery as much as we can is now really important as well. We have basically customers of the protocol, and as the protocol developers, when things don't work, we need solutions in place to protect users. We need to fix things if they go wrong, which thankfully isn't too often. But it's a lot of work, but these things all compound on each other, and things will just be humming along, and then all of a sudden you'll see like a giant spike in volume one day, and then things will drop off. So I have no doubt in my mind that one of these days this year, that number will have 7 zeros behind, no, 8 zeros behind it. I don't know, 100 million. That's what I'm getting at. But yeah, it seems with everything that's coming up and the things I know about, I'd be shocked if it doesn't happen.
Awesome. Like I hope you guys hit that number, because that would be a good sign for the space as well. That would show that all of us are growing. And yeah, thanks a lot for your time today. I will see you on my timeline.
Thank you very much, Aja. Thanks for having me. Really enjoyed it.